Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the key highlight events of the week. It's a central bank week, meaning that a lot of central banks will be reporting their interest rate decisions this week. Ranging from the Federal Reserve Bank of the US, we'll be seeing the Bank of Canada, Bank of England, as well as the Bank of Japan make interest rate decisions. So there will also be a host of CPI reports from major economies. So we'll go through each one of them, try to understand how they might impact the markets. Once we cover these, we also do some technical analysis, try and understand the prevailing market patterns. And once we're done with that, we hope everyone will trade from an informed perspective. So as always, these sessions do not constitute of investment advice. They are not a recommendation to trade, so you should always do your own due diligence. So let's begin with the economic calendar. Remember, once you join in, can you say hi on the comment section? Of course, this will confirm that everything is working fine. And of course, to also confirm that you have also started on a positive note this week. So good morning, Robert Cavale. I can see you in the house. Smith FX, good morning. So from the economic calendar, you can see that early in the morning, what we had was a flurry of economic news from China, and they were all disappointing. So if you look at new home prices month over month, they were down 0.3%, same as the prior reading, or very close, negative 0.31%. Key highlight was industrial production, which was at 5.2%, missing expectations of 5.7%, and slowing down from the prior reading of 5.7%. So retail sales in China are also down by 3.4%, which missed expectations of 3.8%, and the prior reading was 3.7%. So fixed asset investment year to date over year was up 0.5%, which also missed expectations of a 1.5% growth and 1.6% as per the prior reading. So there was the NBS press conference and unemployment rate data. So unemployment rate was on the increase up to 5.3% compared to the prior reading of 5.2% and the expectation of 5.2%. So that's the key highlight as we begin the week. We know that there is a bank holiday in Japan all day. And now looking ahead for the rest of the day, we'll be looking at the trade balance from the Eurozone at midday. Then we'll be focused on Canada and US with manufacturing sales in Canada data coming up at 3:30 p.m. Wholesale sales in Canada at still at the same time. Then the Empire State Manufacturing Index on the US side, we're expecting a slowdown to 4.3, down from the prior reading of 11.9. And lastly, towards the end of the day, we'll be getting a speech from ECB President Christine Lagarde. And once we see that, that will be the end of the major news for the day. So looking above and ahead for the whole week or for the entire week, we have quite a number of data points that we'll be expecting this week. So we'll begin with the CPI from Canada. So the consumer price index in Canada data is expected on Tuesday at 3:30 p.m., where the main focus is usually on the trimmed CPI, and we're expecting that it remained the same at 3.0% in the month of August compared to 3% in July. So we'll also be looking at core retail sales as well as retail sales from the US. We're expecting an increase in core and also a decrease in overhead retail sales. In this case, an increase of 0.2% is marginally lower compared to the prior reading of 0.5%. So on the core retail sales, we're expecting a 0.4% growth, which would be higher than the prior reading of 0.3%. And as we all know, retail sales tend to correlate perfectly or positively with the strength of the currency. So higher retail sales would imply a stronger dollar. Weaker retail sales would mean a much weaker dollar. So then fast forward, we'll get inflation report on Wednesday at 9 a.m. for the UK. We're expecting inflation to remain at 3.8% as per the prior reading, whereas core inflation is expected to slightly slow down to 3.7%, down from the prior reading of 3.8%. So for the Eurozone, we'll be getting the final CPI, which is expected to remain steady at 2.1%. And then we enter the central bank's territory. So the Bank of Canada is expected to cut rates by 25 basis points this week from 2.75% to 2.5%. The major announcement will be happening on Wednesday at 4:45 p.m. Then we get the Fed news, which will be the main event of the week. So every investor trader out there will be more interested in understanding whether the Fed will be cutting by 25 basis points or 50 basis points. So the market consensus or the analyst consensus is 25 basis points. So we expect rates to go down to a range between 4.0 and 4.25%, down 25 basis points from the upper limit of 4.5%. So there will also be the FOMC press conference, which is the follow-up meeting that happens after the rate decision. So investors will also be following closely to see what Powell has to say about the strength and health of the US economy and potential future monetary policy decisions. So we also get GDP data from New Zealand on Thursday at 1:45 a.m. We're expecting a big slowdown from a prior increase of 0.8%. In this case, we're expecting a decrease of 0.3%. Then you get the job market report from Australia, where unemployment rate is expected to remain the same, but then the number of jobs created in the prior month expected to have increased by 21.2K, which is a bit of a slowdown from the prior reading of 24.5K. So then we get the next central bank, which is the Bank of England. In this case, we're expecting that there will be a majority vote of 8 members considering holding rates at the current level of 4%. So we don't expect a change in the interest rates in the UK. So we'll get Philadelphia Fed Manufacturing Index on Thursday at 3:30 p.m. And then as we approach the end of the week, the last central bank we'll be focusing on is the Bank of Japan. So the Bank of Japan is expected to hold rates steady at 0.50%. Of course, there will be a monetary policy statement, which will be expected to move the markets, especially the Japanese yen, as well as the Nikkei 225 index. So after the press conference, the rest will be retail sales reports, mainly from the UK as well as the US. From the UK as well as Canada. So this will be happening at 9 a.m. on Friday and 3:30 p.m. on Friday, where for Canada, retail sales are expected to really slow down to negative 0.6%, whereas for the UK, you're expecting a 0.4% increase, which is a bit slower than the prior reading of 0.6%. So that's what we're expecting as the main news for the week. And of course, the whole market is expected to be mainly focused on the US because the Fed controls the world reserve currency. So all these other currencies are priced in the dollar, so the movements in the dollar will be more important. So other than that, looking at the week ahead, trying to see a couple of articles I had gone through earlier in the morning to see if these are any key highlights. So from the Trading Economics website, the key highlight as of this morning is that China industrial output retail sales growth is below estimates. So even if you don't participate in the Chinese market, there's usually some things to take away from the reports, where there's usually a very strong correlation between the performance of the Chinese economy and oil prices. So China, being the largest importer of oil globally, means that if they are experiencing good growth, then there is a higher demand for oil. If there is a slowing down, then that means lower demand for oil. So we should be expecting to see a weaker oil market this week, despite the strong performance last week before dropping on Thursday. So bond yields are on the rise again as of this morning, ranging from the US, the UK, Australia, Brazil, Russia, India, Canada. You can see bond yields on the rise again, and this is for the top 10-year treasuries. So this basically means that investors are still dumping bonds, and as a result, we should be expecting a very strong performance of gold this week. So if the bond yields continue rising this week, then we should be expecting more demand for safe haven assets, and in this case, we expect gold to extend its rally. So on the currency side, we have seen major currencies make big swings. So as per this month or the last 30 days, the strongest currency has been the Australian dollar, which is strongly correlated with gold and safe haven asset demand. So being up 2.42%, the Swiss franc is also up 1.2%, despite them having 0.0% interest rate. What we have been seeing is more demand for the CHF, mainly as investors look for safe haven assets. So the weakest one has been the Japanese yen and the Canadian dollar, which have lost by 0.15% and 0.21% against the USD. So as for today, since the market opened, the Australian dollar still remained strong. The pound is also strong. The yen is slightly strong at 0.15% gain, whereas the weakest has been the euro and the Swiss franc. So on the stock market side, last week was quite a week, with the stocks mainly being on the bullish side. The key highlights as per last week were that tech companies made some really good gains, with Tesla being one of the top gainers. So we also had other companies that were reporting earnings and making some big moves, but towards the end of the week, the focus was mostly on Tesla. So I had an article here looking at Tesla. I'm trying to find it. Give me a sec. Yes, it's right here. So this is a Tesla stock, and as we know, especially around April 2, we had a big dump in Tesla shares, where the shares were down over 50%. So much of the rest of the year has been more of a recovery. So if you look at the year-to-date performance of Tesla stock, it's still down 1.96%. But this is an impressive recovery from a stock that moved from $426 and dropped to around $222 within the space of 1 month. So after that, we have seen an impressive recovery from Tesla shares. And as per the close of the day on Friday last week, the stock was up 7.36%. So it means that there's evidence of buyers coming back into Tesla shares. So if you look at overnight trading, mainly from Robinhood, for them, they allow 24 hours trading of stocks. So sometimes we get signals from observing the trader behavior on Robinhood. So in pre-market trading, the stock is already up 1.53%, which means that it's likely to jump to $402 at market open. So we could be seeing a continued momentum in Tesla shares as of the start of the open of the market this morning. So one other key highlights, very important update as of this morning. I try to shift to the summaries, where on one side, if you look at the weekly variations as per last week, Warner Bros. Discovery was one of the top gainers, being up 33%. Oracle Corporation reported earnings and the stock rallied by 25.51% after they announced a deal with OpenAI. Micron Technology was up 19%, whereas the biggest losers were Humana, down 10%. The Trade Desk was down 13%, and Synopsys was down 28%. So for the broader market indices, the Dow Jones was up 0.95%, Nasdaq 1.86%. On the London side, the FTSE 100 was up 0.82%, whereas gold was up 1.43%. So West Texas Intermediate Oil, or US oil, was up 0.58%, whereas the euro dollar gained by a slight 0.15%. So key highlights explaining why this happened. Oracle was up 25%. The database and cloud giant saw its order book surge after signing a mega contract with OpenAI. So these new prospects redefine its growth potential, and Oracle is now seen as a key player in the global race for computing power in generative AI. So on the Chinese side, Alibaba, we had mentioned last week that they are raising funds to accelerate their growth in AI. So the Chinese e-commerce giant is taking initiatives to strengthen its position in China's booming AI sector, particularly through the use of in-house designed chips. So on the UK side, Anglo-American was up 12%. The British Mining Group has finalized its $53 billion merger with Canada's Teck Resources, creating one of the world's top 5 copper producers. So the new entity will be called Anglo-Teck and is targeting nearly $800 million in annual synergies. So Anglo shareholders will also receive a special dividend. So on the defensive side, this is also from the UK side, BAE Systems was up 11.48%. The British Defence Group will partner with Thales to deliver a submarine sonar to the UK. European defense stocks are also benefiting from heightened tensions as Russian drones targeted Poland. So BOC was up 9.76%. JP Morgan upgraded the stock from neutral to overweight with a higher price target. The US bank cited improved fundamentals in the European cement sector and strong exposure to Germany. And lastly, Inditex was up 9.82%. So this is the world's largest listed fast fashion retailer, which was hit by currency effects in the second quarter. Still, management remains optimistic as sales have returned to double-digit growth since last month. Investors are betting on a strong year-end. So among the companies that flopped last week includes Synopsys, which was down 28.87% after their management admitted to strategic missteps and announced a restructuring, including a 10% workforce reduction. So Chevy was also among the companies that were reporting earnings last week, and it dropped by 18.12%. So despite the momentum, the company remains cautious for the rest of the year due to a hesitant pet market and macroeconomic uncertainties. At more than 70 times annual earnings, its valuation is becoming difficult to justify. So Associated British Foods was also down 11.32%. So this is the Primark owner, which reported mixed results. Growth is picking up in the UK and the US, but overall remains held back by weak consumer sentiment in Europe. In food, the ingredients business is performing well, but the sugar division continues to weigh on results due to low prices and the closure of the bioethanol plant near Hull. So Nexi was down 11.68%, and LSEG, the company that operates the London Stock Exchange, was also down by 6.88% as subscriptions remained low. So on the commodities side, we know that WTI was strong. Two opposing forces are shaping the outlook for crude prices. On one side, a structural trend of abundant supply and its downward effect on prices. So we know that OPEC has just been increasing oil output since April. So every month they keep announcing an increase in output, and this has had a downwards pressure on prices. But then on this other end, we know that Russia has had its challenges with Ukraine, and Ukraine has been targeting out of crude factories in Russia, and this has impacted supply, leading to increasing prices. So on the metal side, gold has been making headlines this week thanks to its strong momentum and record highs. The precious metal is supported by central banks, notably China's, which has been adding to its reserve as part of a diversification strategy. Another driver is the prospect of Fed rate cuts, which continue to boost gold prices, with the metal hitting a record high this week of $36.74 an ounce. Moving to industrial metals, the trajectory is the same, upward. Copper reached its highest price in more than 5 months, climbing up to $10,068 per ton on the London Metal Exchange. So this rebound is fueled mainly by expectations of US rate cuts and concerns over supply disruptions, especially in Indonesia and Peru. So on the agricultural side, wheat futures in Chicago remain under pressure, with prices weighed down by abundant supply. The December 2025 contract is trading around 518 cents per bushel. Corn for December 2025 delivery, however, is rising, reaching for 21 cents per bushel. So clearly, those are some of the key highlights. So on the crypto side, Bitcoin continues last week's momentum with a 3.5% gain since Monday, climbing above 115,000. The rally is fueled by massive inflows into spot Bitcoin ETFs, which have recorded more than 1.6 billion in net inflows since the start of the week. Total assets in spot Bitcoin ETFs now stand at 149 billion, representing 6.57% of all Bitcoins in circulation. nearly 40% of which are held by BlackRock's ETF called EBIT. So on the other hand, investors are increasingly worried about companies that have built up large Bitcoin reserves as part of their corporate strategy. Their share prices have slumped over the past month, with MicroStrategy down 17%, MetaPlanet was down 33%. Other major cryptocurrencies are following Bitcoin's trend, with Ether for Ethereum being up 4.77%, Solana being up 15%, and XRP for Ripple up 5.7%. So clearly, it's a busy week, and we are seeing a lot of shifts in investor behavior. And one of the key investor behaviors out of you guys, traders and investors, have been observing is in the crypto industry, where the altcoin season index is way up at 70. So usually there is this bullish market season where Bitcoin tends to outperform everything. And then later stage of the bull market, altcoins start gaining popularity. So as of this moment, the altcoin season has had a high of 87, while Bitcoin season a high of 12. So if you look at the chart here, the altcoin season index is currently at 70, and the market cap is at $1.73 trillion. And you can see that the altcoin season has largely been increasing and increasing, meaning that you might start seeing meme coins coming up. So this is often in the late stage of the bull market, where after the alt season, we tend to see the market collapsing by 40-50% before making recovery. So there will be more on that over the week. So I'm trying to see what other highlights we might have missed. So China says Nvidia violates antitrust law, shares down in pre-market trading. So this was updated 15 minutes ago. So we could be seeing some increased activity on Nvidia stock at market open today. Of course, we know that the stock is down by 2.19% in pre-market trading. So in other news, SNB total site deposits 12 September were equivalent to 468.5 billion Swiss francs, which was a slight slowdown from the prior 471.9 billion. So clearly, site deposits for the Swiss National Bank are slowing down. Trying to see if there is any other update we have been missing. Yes. So the US-China trade negotiations continue this week. So we should be expecting to see more activity as the week progresses. So on the Fed rate decision, we know that Trump has been trying to get a majority in the FOMC. So as per this morning's update, having lost the first attempt to keep Governor Lisa Cook away from this week's Federal Reserve policy meeting, the Trump administration appealed the decision, asking the courts to rule before the start of the FOMC meeting on Tuesday. So incoming Governor Stephen Miran, currently CEA chair, is expected to attend the FOMC following his anticipated congressional approval on Monday. Meanwhile, the Supreme Court is expected to issue a ruling in the coming weeks on the administration's appeal of a lower court decision that undermines part of the tariffs introduced this year. So yes, still Trump doesn't have a majority in the FOMC. So this means his pressure for the Fed to cut interest rates aggressively might not be in play this week when the FOMC meeting happens. And this suggests that we are still on course to a potential 25 basis points rate cut. So as from the CME Fed Funds futures, we are largely expecting that it will be a 25 basis point rate cut. So remember, the Fed meeting is in 2 days. This is a bit slow to load, but it has eventually loaded. So we remember that last week, here we had a 10% chance of a 50 basis point cut, but then that chance has reduced to 5.8%, leaving 94.2% probability that the Fed will be going for a 25 basis point rate cut. Give me a sec. So now that we've covered the key events that we're expecting in the markets this week, I think it's important now that we head straight into technical analysis and try to understand what might be the prevailing patterns for the week and how to trade those patterns. So for those who just joined for the first time today, you should know that these sessions happen daily from Monday to Friday. So we try to cover deeply as much as possible, trying to understand the key events for that particular day. And once we understand those key events, then we are able to generate trading ideas. So also we have a new episode that is live on the Bullish Banter podcast. Make sure to check it out. And if this is your first time trading, you're just completing your learning and you'd like to move into a live trading account, check the links in the description below. Right now we have a big offer where you get 100% trading bonus capped at $5,000. And if it's your first time deposit, you'll get that 100% deposit bonus. So let's get to the technical analysis side of our presentation today. So the key highlight is that the dollar index was weak last week, had a big sell-off on Thursday. Friday continued weakening, and today it's still weak and seemingly still bearish. So whenever you see this, you know that other currencies tend to take advantage. For instance, we saw the pound jumping higher. So after the non-farm payrolls last week, here we had a very strong rally. And what we are seeing here is a continuation of the bullish momentum, meaning that we are on the verge of a bullish breakout. And now that we are testing the high of last week, a good chance that we accelerate higher for the week, and pound USD could potentially rally to 1.36777. So for Euro USD, it's still the same thing. So we are still within a channel that we had identified last week. So there was a big sell-off here. You notice that in earlier days of last week, there was a big sell-off before the big jump on Thursday. And this week, we are looking to retest the previous high at around 1.17783. So amid a weak dollar, we should be seeing a retest of this level here. And this is before the main event, which will be the Fed rate decision. So the interest rate decision is largely priced in. So this means that it's likely that the dollar will strengthen on the announcement on Wednesday, which means that earlier in the week we could be seeing some weakness in the dollar. So that can be perfectly seen in some of these movements. For instance, USD trading against the Swiss franc. You can see the big loss on Thursday, an attempt to retest this area here. And now today, there's that potential that eventually break and retest this support at 0.79158. So for USD JPY, we remain on a pretty tight range on the 4-hour chart. So really the market has been struggling to move to the upside. So yes, we had this bullish momentum happening even on Friday. But then every time we attempt to push higher, you can see sellers coming in and pushing prices back down. And this means that the market has stayed limited to between these two trend lines, one working as support and the other one working as resistance. You can see several attempts to break above this area have failed, and the market remains subdued, which implies a weak dollar and a strong yen. And here we are seeing the same thing as the market shows weakness in the dollar. So we could be seeing the yen pushing for the low that we saw on Thursday last week as a potential target between today and tomorrow. So on the other hand, looking at Japan's stock market index, I had a major breakout 2 weeks ago. Last week extended the rally. And now as we head into a new week, we are looking at a market that is cruising in new all-time highs. So in such a market, we wait for pullbacks and continue trading along the trend. So here the pullback we have is one of a kind, which looks basically like a flag. And whenever you have the shape of a flag, you patiently wait until there is that eventual break. So if you happen to see a break, especially to the upside, that would mean the start of the next momentum phase. Then that should be a nice area to target for more bullish momentum. So for the UK 100 index, there was a big sell-off on Friday last week. But then even if there was that sell-off, we know that we are very close to new all-time highs. And there's that potential that we see the market pumping back up. So this last week's high could potentially be our target for this week once we have significant support and evidence of buyers coming back in. So far, it shows some panic selling on Friday last week, but then this has always been met with more bullish momentum. We have seen it happen over and over again. This sell-off and the market recovering, a big sell-off, market recovers, and now we have yet another sell-off that could potentially be faced with a strong market bounce from those lows. So as for China, we had a very strong bullish momentum after trading within this channel for a while. So you can see the sideways momentum that was playing out here. So eventually, the market was unable to move to the lower trend line. We had the break on Thursday, and the market extended the rally. Then on Friday, we moved even higher. And today, yes, the market has opened with a strong momentum. But then after the early morning Chinese news, yes, there was a slight pullback, but the bullish momentum continues. So this is one market that is making an impressive recovery. And the last time we saw those prices was back in October last year. So we could be seeing the market progressing higher. So the idea is to trade the pullbacks. So whenever you see those pullbacks, then you take advantage of them. So the Chinese stock market index, China A50 index, was down about 48%, and this is within the span of 4 years. So last year, we saw some major recovery, and this year it shows that we are getting even more recovery. So it's a market that is poised for moving higher, mainly considering that China might be cutting interest rates and stimulating its economy to achieve more growth. So on the US side, the Nasdaq made some strong bullish momentum as per last week and went into new all-time highs. So today we retested the all-time high. You can see this was the high on Friday. So immediately after the testing, you can see the big sell-off happening immediately after that. So this prepares us for a potential pullback ahead of the FOMC day. So we could be seeing the market retesting some previous lows. So one, the daily low and New York session low of Friday last week has already been retested. And if we push below that, then good chance that we move even lower. So here we should be looking at potential targets based on the previous session highs and lows. So this seems like a super important level to me. Trying to identify it here. So this is a pretty important level that was working as resistance and now turned into a support area. We could be seeing a slight push towards this area. So for the US 30 or the Dow Jones Index, we are seeing an important bounce here. So this was a key level for many days. And after we broke above it, it's reasonable to observe a retest. So here the market pulled back and now you can see it's bouncing. So from the 15 minutes chart, this is more of a liquidity grab, the market attempting to go down and then immediately changing direction, which means that we could be likely seeing the Dow recovering and pushing higher. So for the SP 500, here we are seeing something similar, more of an attempt to pull back after we made some good rally last week. So from the forward time frame, you can see we already broke the upper trend line and the market is really retesting that trend line. So the way it's doing it is through the formation of what looks like a flag, where the market can be easily understood as consolidating. So we will be observing this flag to see signs of a break. That break hasn't happened yet, so we continue observing. So Bitcoin has been on a pretty good momentum, especially after last week. So looking at the forward time frame, you notice that we expected after this break here, we would see a rally extending all the way up. So the rally continued, got to our first target, which was $115,623 per Bitcoin. So we didn't get to the second target or the third, and what we are observing here is more of a consolidation. So it would be, in order to assume that this market for the last 4 or 5 trading sessions has been moving sideways, with this being the resistance and this being the support. So we'll observe this sideways momentum or this range until we have a break. So we don't have a break yet, so no direction yet. So we haven't touched on commodities. So for oil, last week on Monday, we talked about looking for potential short selling opportunities. So the short selling opportunity came late on Thursday after the market broke the lower trend line or the key level support. So there was a big sell-off, and then the market rallied again to retest the previous resistance. So on Friday, after we got here, the market dropped, and today we start yet another week. And with weak Chinese data, we implied that there's a good chance that we see oil weakening again. So you can see early this morning after the Sydney session, oil was on a bullish trajectory. Then after Chinese data, a drop. So this shows the potential likelihood that oil continues the bearish momentum that we saw late in the evening on Friday. So on the gold side, we are basically trading in a triangle. This is a consolidation sign. This basically means that the market is consolidating on a very strong bullish market. So what this means is that eventually we should be expecting to see a breakout, especially with the Fed rate decision. Then overall, from the long-term trend on the daily, the momentum is still bullish. So sometimes this pattern will happen on a higher time frame. For instance, we had a 4-month sideways momentum in gold before having a big breakout towards the upside. And now we are getting a much smaller pattern happening across the span of 4 or 5 days. And eventually, we should be looking at a break and a continuation of the bullish momentum. So for silver, we had a similar pattern here. The market broke and kept moving higher. And after breaking out, now we are seeing an even smaller pattern shaping up on the 15-minute chart, also indicating that this market is consolidating and eventually it will make a break. So we should be observing this because when the market breaks, it's often a nice opportunity to trade the momentum. So on European equity side, the German stock market index is still trading in a range. So here we're expecting the push towards this resistance area here. And yes, we can look for bullish positions if there's a break. But the idea is once we get to this area, the market remains within pattern and moves further back downwards. So for the EU 50, here we are seeing a very strong bullish push. We had a key level resistance here. Market passed it as if it were nothing. So now we are looking at the next level push. So this was the key level support and resistance in many occasions. So here, if we push or cruise through that, then we move on to the next available area. So clearly, it's a market that has been struggling with making 100% comeback from the March-April sell-off. So every time we get to 80-90% recovery, the market keeps dropping. But now, eventually, we could be seeing a push that reclaims the previous levels before Trump's tariffs, and we could be seeing the market going into a new all-time high. And that means buying the pullbacks. Every time there's a pullback, then it represents an opportunity to go long again. So France stock market index, despite the French government collapsing, riots and everything, we mentioned last week that this was being taken positively. So this was on Thursday. We had a pretty nice bounce. Friday we continued, and today, as we start a new week, the stocks are extremely bullish. Of course, the target is the previous high, 7,988 euros per share. So Swiss stock market index, here we got to some good recovery, but we haven't been able to break this area here. So every time we get to that area, we have seen a bit of a sell-off. So we should be observing the level and extent of the sell-off, looking for evidence of buyers coming back in. We don't have that yet, but once we have that, then it might be a nice idea to go long. So we got 100% recovery from the prior sell-off move from the Norwegian stock market index. And now from the daily time frame, you can see that we are cruising into new highs. So it's one of the markets to be targeting if you're looking to ride a strong momentum market. So other than that, lastly, the Hang Seng Index. From the daily time frame, it's a strong bullish momentum. From the weekly time frame, you can see that we are at price levels that were last seen in 2021 August. So now pullbacks are taken as potential entry zones. So from the 15 minutes chart, you can see the way these pullbacks are being treated. So every time there's a pullback, the buyers come in and push the prices even higher. And now we just had yet another pullback, which likely means we could be seeing another push to the upside. So that's it for the day. Now I believe we can check to see if there's any questions as we approach the end. So the latest episode of the Bullish Banter podcast features Stella Swakey. I'll try and get you an easy description. So in this episode of the Bullish Banter podcast, we sit down with Stella Swakey, an investment and economics analyst at Standard Investment Bank, to explore the current investment landscape in Kenya and beyond. So from the interplay between fixed income and equities to the impact of geopolitics on commodities like crude oil and safe haven assets such as gold. So make sure to check it out. There's a lot of good insights to take from the episode, and you can always share your feedback on the comment section and we will respond right away. So besides these, there's more episodes of the Bullish Banter podcast, and we will be dropping them real fast. So at the same time, Bullish Banter podcast now has a community on Telegram. So I'll be sharing an invite link on the comment section on YouTube on this live. So make sure to check the comment section for a link. Here in the community, we are doing more updates about the market. So if you need to keep updated with the market, podcast discussions, and any new thing happening in the market that might need explaining, including memes, key trends, trading ideas, then you should definitely be part of the group. So check the link in the comment section. I have just dropped it. So if you are new to trading, make sure to go to the FX Pesa page on YouTube, go to playlist, and then scroll to the playlist named Novice to Pro. So these will help you begin your trading journey, ranging from introduction, what is trading, what is Forex, what are candles. So you go through 10 episodes and you speed up your journey in learning Forex. This is free of charge. So if you are at a reasonable level and you understand the basics in trading, then you should know that on the FX Pesa YouTube, if you click on the live section, this is where you're able to see the live sessions we do every day, Monday to Friday at 11 a.m. And in these sessions, we cover the top news as of that day. So for instance, Friday last week, we were talking about the non-farm payrolls. On Thursday last week, we were looking at trading gold, USD, and Euro pairs on ECB and US CPI day, where the European Central Bank decided to hold interest rates steady, but then US CPI was mixed, and we talked about the market reactions. So today, we focus on an overview of the entire week and things that we're expecting for the week. So you can always find these recorded episodes right here. So if you share these with your communities, this will also be very much helpful. So let's tackle the last part of today's session by focusing on the key questions. So I can see Omalo in the house, Holion in the house, Maureen Kakungi, thank you for joining, Paul, Joyce, Glenn, Charles Palmer, Brayo FX, Odiwa, Malcolm X, Ochieng. Thank you guys for joining. So, a good question from SmithFX. Do you think it's best to trade the FOMC? Well, when it comes to trading, the main focus is on volatility. If a market is not moving, then it's not tradable. We trade markets that moves. So this economic events tend to establish some long-term moves that determine the direction of the market. So in this case, the main focus on the FOMC is how rapidly the Fed is looking to be cutting interest rates. So if the Fed decides to be aggressive with the rate cuts, that would imply a weak dollar, and that would give us a long-term trend in gold, where investors will be dumping bonds and going for safe haven assets. In this case, an increased demand for gold. So that is the perspective, not just trading a reaction to what is happening, but also underlying the market force that might be driving markets for the next 1 month, 2 months, or 3 months. So if you are a news trader, then you need to be heavily skilled, and it's not the right idea for everyone. So the market has already factored in the rate cut by the Fed by around 25 basis points. If they give a 50 basis points, would it act as a shock to the market? And during Fed's speech, would we focus more on the Fed's tone? Yes, there is that question whether you'll be getting 25 or 50 basis point cut. So a 50 basis point cut will be an entire shock to the market. And whenever you see such a shock, that means that stocks would likely take that positively, and we would be seeing the SP 500, Nasdaq, Dow, all cruising into new highs. So on the other hand, a rapid rate cut would also cause a panic in the bond markets, which likely would mean demand for safe haven assets. So we could be seeing gold also cruising into newer highs. So as for the dollar itself, we could be seeing it weakening and running towards 96 for the dollar index, and of course other currencies taking advantage of the dollar weakness. So as I've mentioned, the question on FOMC, we have daily sessions, and we'll have more data before that day comes. So we'll have a session on Tuesday, we'll have a session on Wednesday. So on the FOMC day, we'll still have a market snapshot where we get to dive deeper into the specific event. So as I've mentioned, as we progress towards the FOMC day, since the market is already pricing in the 25 basis point cut, better bet would be on some level of dollar weakness on Monday and Tuesday. So how can we know the phase that the economy is in, whether it's in expansion or whether it's in recession? Well, it's pretty easy to know. You just check out the macroeconomic data. So an economy under expansion usually has a low unemployment rates, usually has high growth and fast rising stock market. And an economy in recession is usually hinted by a worsening job market. So a recession is the first path to the end of the expansion phase. So you tend to see more of companies cutting jobs, and once the unemployment rate starts rising, then you know that we are getting closer to recession. And usually the basic indicator for a lot of economists is when you have 3 consecutive quarters where the economy is contracting. In that case, you have a recession. So if it's 2 consecutive quarters, these days, I think they are redefining it. They are basically saying a mild recession. But then once it gets to the 3rd quarter, then you know that the economy is in a deep recession. So far, for a majority of global economies, they seem to be expanding pretty well, and their stock markets are near all-time highs. Growth is still quite positive, so no worry over recession as of now. So a lot of economies are projecting to get into some form of recession next year, but not this year. So that's it for the day. Thank you. Thank you for attending. Thank you for sharing. So if you're watching this on YouTube, kindly like and subscribe to the channel. You'll get updates whenever we have new content and events coming. And if you're watching this on X, a like and retweet also go a long way. Thank you, everyone, and I hope that you have a profitable week.